This is the beginning of an operation in which large mutual funds and investors and people who are investing, professional money managers and 401k plans, are starting to sell out on their positions. Generally, this happens in a way that you wouldn't be able to tell. In other words, this is a very subtle way of telling you that they are in fact selling out of their shares. Now, if you're not paying attention to these large one-day price drops with a large volume, then you're going to be sorry later on, because the price, even though it may fluctuate up and down here, eventually, if there's enough selling in the stock by professional investors, this is going to drop dramatically. In fact, if you take a look at a lot of different kinds of stocks, let's take Starbucks as an example because it's one of my favorite examples. Mutual funds were buying Starbucks way back here at the 1250 level. They knew, and they had the research to back it up, that there was a tremendous demand for the Starbucks product. And at that time, they took positions in Starbucks at these price levels. And they may have even been buying on the way up to support the stock. Eventually, there was a tremendous amount of exuberance in the stock because probably individual investors right around this area started catching on to the fact that, hey, this stock has moved from 1250 up to 2250. Let's get on board. And they started pushing the stock higher. Well, at this point, the mutual funds probably haven't gotten enough profit out of the stock, so as it sold off, they began buying the dips, running and supporting the stock on the dips. Once again, the individual investor said, hey, I'm going to go in and buy the dips as well, so they're buying the dips. Now there's an additional run-up of prices, and the very smart investors were buying down here on the dips, and then as it ran up, more and more people started to take notice of the fact that, in fact, Starbucks was moving up again. There was a little resistance level right around here in 32.50, and then it broke through that. And in an exuberance of massive proportions, the stock moved up almost to 40, and eventually started selling off. Well, I can guarantee you that professional investors and mutual fund, professional investors were selling into this rally. They were trying to sell as much stock as possible to the public during this rally in order to exit their positions that they purchased back down here when the stock was only $10. They have to do this over a period of time in order not to put down the price so far on themselves that they won't be able to get out at a decent profit. In addition to that, not only are they buying the stock at low levels and selling the stock at higher levels, in addition to that, when they do go out and sell their positions at these levels, they also engage in buying activities. And that might sound strange to you. Well, if they want to get out of the stock, why are they also engaged in buying activities? Well, they engage in buying activities to mask their selling. In other words, they run up the prices are running up. More and more individual investors like us get involved in the stock at these very high levels after this exuberance run here, this unnatural run of prices that get to the point where it's almost a straight up line. And when a stock is going up every single day, every day, and then jumping sometimes and gapping up in price, individual investors who don't really understand what's going on, will get in extremely late on these positions. And the mutual funds are there to sell them their stock. But on the way down, the mutual funds realize that when they start flooding the market with shares of the stock, prices are going to start dropping dramatically like they did here. A couple of signs that their institutional investors are selling are the large volumes here. There's one here, and there's one here. But what happens after they start their selling activities? Well, prices kind of stabilize and then they actually start going back up again. That's because at the same time that the mutual funds and professional investors are selling their stock, they're also supporting their stock by buying some of it back. On the next higher level, they unload even more of their stock than they bought here. And they do this in order not to drive the price down because they haven't completed their operation of selling yet. In other words, let's say they took a single day and a single mutual fund had 10 million shares of Starbucks. Well, Starbucks only trades about an average of maybe 5 to 7 million shares a day. If a mutual fund, think of yourself as a mutual fund for a second. The entire one day of trading is about 7 million shares. What would happen if you went into the market with 10 million shares to sell in a single day? You would get an unbelievable price drop on you. So they have to sell their shares gradually over time. And while they're selling, let's say they sell maybe 500,000 shares on this day, and they sell another 300,000 shares on this day. Well, the next day they might go in and buy 100,000 shares just to prop up the stock a little bit, because they don't want it to get too far down in price, so they can't sell it at a profit. They actually support it by buying 100,000 shares. Well, now they just unloaded 800,000 shares, but they're going to buy 100,000 shares to prop up the stock. Then as it goes up, they continually sell more stock to more investors who continually see that someone is supporting the stock here. Well, somebody's supporting the stock because the stock stabilized in price and is starting to go back up again. And they don't realize that it's the mutual fund and professional investors that are actually supporting the stock only because and only for the reason that they want to sell more of their shares. Eventually, at some point, people are going to get wise to the fact, and there is so much selling coming into the market because now the mutual funds have gotten to the point where they have to start unloading more shares again after they've supported the stock. Well, now they start selling another, here's 1 million shares, here's 500,000 shares, here's 300,000 shares, here's a couple 100,000 shares. Okay, let's go and buy a couple 100,000 shares or 100,000 shares back, support the stock again. Individual investors see that the support is coming in, and they rally the prices back up, and now all of a sudden the mutual funds come in and sell 100,000 shares, 400,000 shares, 300,000 shares. Let's sell 1 million shares today. Okay. Boom. There goes the price. Just drops like a rock. And once again, they have to go in and support the shares. They buy 20,000, 50,000 shares. And as it consolidates, they sell even more shares. At some point, eventually, maybe around here where it dropped dramatically, or here, the mutual fund has completely taken off their books the shares of Starbucks they bought back, when it was like $10. So they've seen a tremendous rise in prices. They have now unloaded their shares to investors, individual investors, and other professionals who have seen this large run up in price, and they fear that they've lost the getting in at an early point, and now they're going to buy at the highs. Well, once the mutual funds start selling out of their stock, now not every mutual fund is going to sell every share of their stock of Starbucks, but they're going to take the majority of their profits at this point. And what happens is when they have stopped supporting the stock on the downside, and they have sold all of the shares that they wanted to sell, now there's absolutely no support left for that stock. There's no sponsorship of that stock anymore. When it starts to trade down, when that stock starts trading down here, that mutual fund is not there to buy 30, 40, 50,000 shares every time the stock drops. Other investors are starting to realize at this point that they are the ones holding the bag. The stock is not going to sustain a $40 price level. There just aren't any more buyers coming into the market at that level. individual investors have already bought at these levels, there's no there's no professional support. In order for a stock to continue rising indefinitely, you need institutional support of that stock. You need someone who is in there buying that stock 10, 20,000, 50,000 shares, hundreds of thousands of shares in order to continue to support this price level and continue to raise the price of the stock.